This is your last chance. After this, there is no turning back. You take the blue pill, the story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill, you stay in Wonderland, and I show you how deep the rabbit hole goes.
1.7% here, lost.
We're red everywhere, essentially, down by 4-5%.
Worst day on Wall Street since the crash of 1987.
Remember, all I'm offering is the truth, nothing more. Follow me.
What is going on YouTube? It's Brendan from Market Makers. Guys, as you can tell in the thumbnail, the year of volatility is upon us. I'm looking for our top trading to the Y2K fractal pattern. I'm looking for our top here in January, possibly this week, 48.85 to 49.22. Then I'm looking for a 9 or 10% sell-off all through February down to 4,400 on the S&P. Then our rally up to 5,200, new all-time high in the S&P. When? Spring equinox to April 8th. In that window, we're going to cover all of it in the charts. And then the massive pull down with the recession. An average decline of 33% in any type of recession takes you to the market low, just slightly below, because the market has never once in history put in a bottom prior to a recession. Now, over the weekend, I watched an interview with Cam Harvey. Most of you probably don't know who that is. He's the man that designed the yield curve inversion indicator predictor for recessions back in the 1980s. His indicator is a 3-month 10-year. Lee, throw up that article. His indicator is 8 for 8 on recessions with 0 false signals. Cam Harvey said he believes by Q2 this year, we'll know for certain whether or not we're going into a recession in 2024. Key bullet point in that interview was that the average over the last 4 recessions now, the average yield curve inversion on the 3-month 10-year was 13 months. And we are now in the 14th month as we sit. So we're well within the average. This goes and marries in confluence with my view of us trading to the Y2K fractal pattern, literally mimicking the same moves on a percentage basis, nearly on a candle basis. And guys, you're going to have to see it in the charts. I'll show you how to lay this out. Something most people aren't telling you, the rally this year in 2024 is largely responsible for 3 stocks. 3 stocks are responsible for these gains. 81% of the gains in 2024 come from NVIDIA, Meta, and Microsoft. We're going to look at them on the charts, and I threw on AMD as well. And of course, we'll cover Bitcoin and NASDAQ. Now, you have to understand, whenever there is a large concentration in wealth, a large concentration in very few stocks, historically, this never ends well. Never ends well. We had the Nifty 50 in the early 1970s, basket of 50 stocks. What happened when that bubble popped? Well, what happened was the S&P fell 67%, the largest break since 1929. We had the tech media telecom bubble, also called the dot-com bubble, Y2K. That was about 50 to 100 companies. What happened? S&P fell 50%, NASDAQ fell 84%. And of course, this cycle, we had the Mag 7, the AI bubble. And if this year plays out with that recession, as I believe it will, then you're going to see a massive drawdown, giving you these swings detailed on that thumbnail, and you're going to see it on the charts in this video. Not going to leave you guys hanging. You're going to see how I lay out these fibs, how I get these targets. So Lee, without further ado, let's start the show. All right, guys, we're going to jump into the charts. If you wish to trade these Ponzi markets, check out our fantastic sponsor, SimpleFX. With our link and exclusively with our link, you get up to a $5,000 first-time deposit bonus available to trade with instantly. You don't have to earn it. You don't have to roll it over. It's right there and ready to trade. Use our link. I'll pin it in the video description as well as the YouTube comment section. You can trade your global equities, commodities, as well as Bitcoin there. And if you want to trade all the cryptos, you can also check out BingX, fantastic crypto exchange. They'll be pinned in the YouTube comments. If you guys have any questions at all, message Lee in the Telegram. He'll be happy to help you out. Both those exchanges will pay for your first month on our Discord. Hope to see you in the room. It is a lot of fun. Let's go ahead and jump into the charts. So as you guys know, we've made a video, the Y2K fractal pattern. So I'm not going to rehash that because we've already done that, but I want to show you the fib layouts for these targets and these moves. And then I'll show you the waveforms associated here on the S&P. And you guys can decide if this is going to play out or not. Remember, this channel is for entertainment and education purposes only. Everything I say to you guys, I view this as my trading vlog, okay? I'm sharing with you my thoughts on forecasting and how I intend to trade the markets. Always trade at your own risk and do your own due diligence. Let's go ahead and look at this. So here's what I'm seeing, guys. Now, this has set up some big trades for us already. We've covered on the channel. If we look at the trend-based fib, off these moves here, going down to your October low of 2022. As you guys know, we talked about this. We traded this on the Discord, 45.92, 500-point drop. Also have this trade here on this descent, 43.82, 300-point drop down to the low. Now, something else about the trend-based fib, look where you're hitting right now, 48.67 to the dollar, okay? 48.67 here on the 3-day chart. So I want to show you a couple of things here in current trend because we've achieved harmonic expansion, the 1618 from this move. We achieved that. Now we're at the 200% move, 48.67. Could that be the top? It's always possible, but let's look at some more confluence here. So the very top I have for this rally up is going to be 49.22 coming off this corrective move, the move that we traded. This is your July 26, 2023 high down to your corrective low in October. Remember, repeating the exact same fractal pattern movement Y2K. Rallied into July, sold off into October. Rallied into January, sold off through February, pushing up March, April, new all-time high. We're going to get to that level, 49.22 for this move. Now, that is the top end of it. We need to go to the daily chart and look at the patterns that are presenting themselves here at this level. Couple of patterns here. So we have 49.22. You guys see some very obvious W's now, right? Because we've been talking about this so long. You guys are very well aware of this. I'm going to look at this W pattern. And when I measure this W pattern in this Wyckoff trading range from the high to the low, 48.85. Do you see that on the thumbnail now? 48.85 for this move. And if I want to look at confluence for this move, do I have a larger W that we traded off of down here at the base? Yes, I do. So I want to look at this W as well and see where this lines up. Look where your 2618 lines up. When you're trading with Fibonacci, a key concept I do is Fibonacci is confluence, okay? You want to look at harmonic expansion ratios. Remember, natural law trading. You want to look at harmonic expansion ratios, especially if they overlap. The same way you would with any type of resistance, volume resistance overlapping with the trend line area. Fibonacci is the same thing, 2618, 1618, right at 48.85. Now remember, my forecast is we have the Fibonacci pivot coming up on Wednesday, the 89-day pivot that's coming up. And then we have the full moon, the wolf moon, which has provided pivots, both tops and bottoms. Doesn't have to be on the exact day. You're looking for a turn in the marketplace. But the Fibonacci pivot is coming up Wednesday, 89 calendar days. So this week could be a pivotal week. And as you can see, we rallied up, sold off some, watch 48.85, watch the push up to 49.22. So let's do this a couple of different ways. I want to show you one more fib layout here. Let's get rid of some of this stuff. So we have 48.85, 49.22. And if we look at the trend-based fib again and look at this tighter wave movement here as well in the marketplace, look where your one fib lands you, 48.57. So this is where you're getting all this resistance from. And if you look at this on the same W pattern that you have right here, if we measure from our midpoint to our higher low, That's where your resistance is, 48.59. Again, Fibonacci confluence. So you're struggling in this range, okay? You're struggling in this range. The next range up is 48.85. Beyond that, 49.22. Remember, I've been teaching over the last few videos, been specifically saying this, time is more important than price. So time is more important than price. So I'm waiting to see as this week progresses, where do we stand on the 89 calendar days on Wednesday? Where do we stand with the wolf moon on Thursday? Are we up at 48.85? Are we starting to top in a smaller time frame down here at 48.60, 48.70? We're going to know as time passes us by. So that's that first move. If the market does exactly like I expect it to do, which is sell off through February after that top, and we can base this on a couple of things, not just the Y2K pattern. Y2K, the market fell 10%. But if you go back and look at what we did in February of 2023, let's look at February 2023. You can start to see these moves. Fractals, guys. Fractals are self-repeating patterns. This is your February top right here. February 2nd, all the way down to March 13th, a 9% down move, okay? And we did the same thing after we put in the top in January in 2022. We sold off in February. Here's your January top in 2022. Let's come out to February here. Here's February 3rd. We sold all the way off once again to late February, February 24th, a 10% move. Do you see the fractals repeating here? 10% in .com in February, minus 10%, minus 10% in 2022, minus 10% in 2023. Do you want to guess what I think we're going to do here in February? Well, let's look at this from a Fibonacci perspective, okay? So from a Fibonacci perspective, since we have this range of 48.85 to 49.22, we're just going to go ahead and call it, what, 49.05, 4900, doesn't matter. You guys get the point of what we're doing here. So if we say price is going to come up just a little bit more to right around that 4900 level before it tops out and retraces through February, then let's get a pull down here of where it be. So let's go up to 49.05. 49.05, come down 10% because that's their average move down. Look what this does, guys. 44.14, 4,414. We're talking about a 500 bar drop. Just if the S&P does what it's done each of the last 2 years in February, which is sell off. By the way, cap that off with your market view. 9-week power rally, very narrow rally, market starting to top out. And if you look at this on some indicator perspectives, let's just look at the 5-day here. 5-day, I want to show you something on the MFI. MFI right now is the most overbought that it has been since 2017 on the 5-day. Okay, most overbought since 2017. So let's see if we can find some Fibonacci confluence for this 10% down move that I believe is incoming. Well, let's grab a fib, guys. We got to grab a fib. And we got to look at our rally up here, the 9-week power rally. So let's go up to this 4,900 level. Again, our assumptions drive our outcomes, okay? So we have to look at this as probabilities. Our assumptions are driving our probabilities. So we pull the fib retracement up. Let's go ahead and add some fibs would be useful here. So we need to get the 618, 382, and 0.5 fib. And now we're going to look at this. Look at that, minus 10%. Right at 44.10. Okay. So in other words, to explain this to people who are new to the channel, power rally up, market topping out, doing what it's done the last two Februaries in a row, including in .com, which is falling 10% down all the way to the end of February. And then we're going to be looking for our rally up. Okay, that's what we're going to look for then is our rally, assuming we hold 4,400. We're going to be pushing back up to a new all-time high. Now, people are going to ask in the comments, well, couldn't price just to say 4,600 at 382, put in his double bottom, his double pattern, move back up? Of course it could, guys. This is all part of trading. What I'm doing is looking at fractal predictions based on market history of what this retracement will be. I'm going to put all this together in another chart that I did already so you can see it, but just follow along for now. 10% move down to 4,400. Through February. We're going to be selling off through February. And then what? Well, we need a fib here back at this level, a fib retracement at 49.05, pull this down to the 618 to get our projections back to the upside. And where would that 1618 land you back to the upside? 5,210. Okay. So let's look at this with a ghost pattern. That might make it easier for people if we use a ghost pattern here. Go ahead and find this real quick. Ghost feed. We'll put this on let's do this on a daily chart so you can see more candles. This will make more sense. Ignore the dates, guys, for right now, because I just want to show you this move with the ghost feed, right? So here we go. So let's use a ghost feed and we'll do this. Starting right here, we'll be pulling down from our imaginary number here of 4,900. We're going to be coming down to 4,400 on the sell-off, the same sell-off we've done multiple years in a row now, and then pushing back up to 5,210. Okay, 5,210. So your candles are going to look like this, and obviously you're going to have patterns along the way. It's not going to be a straight V like this, but in a larger sense, guys, what are you making here? Look at this on the daily. On the daily time frame, you're just making another W to trade, hence harmonic expansion 5,210. After that 5,210, you're looking at your sell-off, okay? Your sell-off, which will happen in confluence with the recession, and that gives you taking out the market low. Now, this looks all messy here because it requires you to use your imagination, but I think most of you understand what I'm doing here. Let me show you what this looks like put together. And here's your market symmetry with the wave moves. As if the patterns, the fractals themselves weren't enough, you can see this in the actual waves. 20% up move, 20% up move. This is the average. 20% up move. And this final move, as you can see, would be an 18% up move to take your all-time high. By the way, what did we do in .com? .com, we did the same thing. 20% up moves and trend. Our final move was 17% for the all-time high. 10% down move in February. And you look at this same exact down moves repeating market geometry, 9.25, 10.97. So these average out to 10%, 10% down, 10% down. And again, February now coming up, 10% down. Have the rally back up to 5,200. Massive sell-off minus 33% after our peak in March. We're talking about the spring equinox. Remember in .com, we peaked March 24th, 3 days after the spring equinox. But we also have the total solar eclipse in confluence with solar maximum, an event that got pulled forward, which was not supposed to happen until 2029. Been over the solar cycles, guys. You can go look at one of the past videos. Market tops and solar cycles, okay? Market tops and solar cycles.com. You can see it over and over again. Went over that in the charts. 33% is the average sell-off with any type of recession, shallow, deep, depression, whatever. This is the average sell-off. This takes you out of your market low by a few dollars. And obviously, I think you're going to take out the market low because, again, market doesn't put in a bottom before recession once in U.S. history. So really, this isn't anything unbelievable because these moves you're doing over and over already in trend. You're doing 20% up moves, 10% corrections, 20% up move, 10% correction over and over. So what is the next logical step? Your 10% correction, and then your move back up. 5,200 is what I have with harmonic expansion for the S&P, where we will top and then begin to decline, okay? So a key pattern that will form out of this, by the way, is 3 waves to a top, okay? You'll form a law of 3 pattern, 3 waves to a top. This is your wave 1. This is your wave 2, wave 3. And you may say, well, what about this wave down here? This was breaking out of your trading range. Okay, this is your Wyckoff trading range. So this is your trading range. Your actual breakout wave here from your trading range, this long accumulation pattern is your first wave, your second wave, your third wave. Law of 3 pattern calls for a top. You will have decline at that juncture. So guys, that's what I intend to do. I'm looking for a top this week here in the S&P or potentially next week, depending how long this drags on. But we have key turning points on Wednesday and Thursday potentially here in the marketplace. And I'm looking for that target to be between 48.85 and 49.22. So that's what I'm looking at. But before we can get there, we have to pass this level on the S&P, which we are mightily struggling at right now. Now, granted, it is only Monday, but your 1618, 48.59, or from the trend-based fib, the 200% retracement, again, Fibonacci confluence. So what happens if we're still sitting here come Wednesday, Thursday? Well, we won't be sitting exactly here. Maybe we'll see the markets pull down some, come back up and retest it. So we'll see as time progresses. Remember, time is more important than price, but you're in that range right now, the 48.50, 49.22. You want to look for this to have stall speed as these three stocks that have accounted for 81% of the gains begin to top out. If we look at this on the daily MFI, have a lot of divergence here on the MFI. Could this continue to push up? Of course it could, but your MFI peak was over here. We are peak overbought on the 5-day MFI on the S&P. Again, haven't been this overbought since 2017. So it is natural to expect a retracement, and that natural level that's repeated over and over is that 9 to 10% decline. So that's what we're looking at on the S&P, guys. And if we go ahead and jump to Bitcoin, what does this mean? Bitcoin on a 3-day chart. Again, big trades I share with you guys on this channel. October 23rd gave you the fractal breakout before it happened, took out the fractal, 50% move, pushed up. We talked about the 618, guys, for weeks, 48.56. We traded this in our room on our Discord as well. 17% drop with the ETF BS news, okay? 17% drop. Now, the key thing here with Bitcoin to understand, Bitcoin led the pump up. S&P followed. Bitcoin hit its peak. Bitcoin dumped. It's still holding its trading range. So what does that mean for Bitcoin? Well, as the S&P inches up, grinds up a little bit higher, begins to top out, the S&P may fall when Bitcoin starts pushing back up to give you a lower high, some type of lower high top. And I say that because when I look at this on the daily chart, guys, MFI is selling back off. You're coming back to the oversold area. And this should allow, if you can hold this trading range above 40,226. Remember, we've had this trading range for weeks now, above 40,226. If you lose 40,226, come back and fail back at that level, that's your pivot to the downside, okay? But if you can just down thrust, whatever, but come back, chop around, I think you're going to get this wave back up for either a lower high, co-equal high, whatever, doesn't matter, but you'll see it in the MFI when it starts to bottom. And as this starts to bottom, you want to look at your targets of where this could come up to if it does want to make a lower high, and the S&P follows my theory, which is it begins to top and sell off very soon. So we're looking at the 618 at 45, 652. And I want to add the 786 back onto this as well. 786, 47, 118. So this would call for price, chop around down here, maybe down thrust, but at some level, come back up, either fail at the 618 at 45, 652, do this type of move, or come higher to the 786. And guys, it's Bitcoin, highly volatile. You should be prepared for it to even retest the range where it fell from, 48, 562, or to get a last gasp effort if the S&P put up to that higher target, 49.22, a last gasp effort to tag 50K, trap as many people as possible. The markets always want to cause max pain. Big dumb money always wants to sell and dump into small dumb money. That's how this market works. But these are your key fib retracements you want to watch at this level, okay? And again, this may not happen until the S&P tops and begins to decline. Then you'll see Bitcoin move up and then decline, okay? Because right now what this is doing is telling me it's holding bottom of the range with your oscillators, allowing them to reset, which means you could have another wave incoming, okay? And we may end up getting a W out of this, something that gives us a more predictable target in a large time frame. By that, I mean we may have Bitcoin move up, pull back, move up again, and give us some type of W where we can get a target form here. You can see the W pattern. Give us some type of W and get a target prediction based off Fibonacci to the upside. Look for fib confluence with these key levels here as well. Let's go ahead and jump over to NASDAQ. NASDAQ, guys, we are looking here. So what's the NASDAQ done? NASDAQ's done a lot. And if we look at our fibs, lay our fib targets, again, 1618, perfect hit, 15,759, whatever this was, 13, 14% correction. NASDAQ's running back up, but where is it going to? It defeated the lower level targets at 17.1 we talked about. So we look at this on a 3-day chart. I'm going to look at this expansion move here the NASDAQ did, and that's 17,499. You see that? 17,499, and the NASDAQ got up to 17,500. 468. So got within $30 of this 1618. If in fact we are going to be topping out this week, guys, and these bigger mega caps that are responsible for 81% of the gains this year, Nvidia, Meta, Microsoft, if they're topping out, 17,499 may very well be your ceiling as you got within $30 of it. Okay. And could you get some wicks above it? Sure. But again, we're going to see this in the S&P. S&P drives higher, NASDAQ may drive higher. Same with the Dow. It is the mother of all the markets, okay? So this is a key level right now for the NASDAQ. If we look at this on our indicators as well, 3-day chart, you're just at overbought. And you can see this looks like you're rolling over to form a double top here, okay? So you can see it in the market movements as well. Watch 17,499. Momentum also flowing down here. Let's go ahead and look at this on the daily real quick, and then we're going to flip to the individual equities. Looking at this on the daily, again, there's your W. You see your W, and it already looks like you're starting to make a lower high for a double top on your MFI. You see this? So you have your top, and here's your lower high if it just rolls over like that. And this is why you're seeing this candlestick like that right now. So we'll see. It's only Monday. We have Tuesday, Wednesday to get to. Wednesday is a potential key pivot in the S&P. And then Thursday, again, Wolf Moon, key pivot. Remember, the lunar eclipse was the key pivot for the 9-week rally to the upside, had many, many full moon tops in the market decline in the correction phase. So this has been a really good pivot point to use in confluence with Fibonacci and your overall market view. Let's go ahead and jump forward to NVIDIA. Look at this rocket ship, right? So NVIDIA, a couple of things. Showed you guys this before. Fibonacci harmonic expansion, first all-time high to your market low. And what did this do for you? Well, if you were patient, it gave you a target of 493.76. When you hit 493.76, you then sold off all the way to 391, right? So you sold off $100 from this move, but now you have expansion and you broke out above your Wyckoff trading range. So let's get some more current targets, because remember, this stock, Microsoft and Meta, are responsible for 81% of the gains in the current market. So let's look at this from Fibonacci. And we got the 2618 at 595. We got just above it at 597. And where am I pulling this from? I'm looking at this small W here. Let me go ahead and zoom in some. Okay, this is it. Well, let's do this on the daily so you can see it a little bit better. Give you more candles. Looking at this from this W pattern. Okay, so this is my W that I'm looking at right here. And there's your up move, right? So I was just measuring this from the W pattern to see what we get. And we can measure this as well from this fractal high to this fractal low. See if we get any type of confluence here. So the closest one we have is 595. And let's see if we put on our additional fibs here, our overspill fibs. If we put on the 1 spot 902 at 602, oh, that's perfect. So 1 spot 902, people ask me all the time what that is. That's the diagonal of the golden triangle. Remember, in market geometry and natural law of trading, you have golden shapes. And people use them all the time. They don't know it. That's what triangles are, guys. So you have the triangle, the golden triangle, the diagonals, 1 spot 902. And so you hit this perfectly at 602. And now you're just holding that. So if NVIDIA starts topping here in this range, let's look at the MFI. MFI is getting right up to overbought. So again, I think it's putting in a top in this range. All this is coming to a head just in time for our normal February sell-off here in current trend, going back to the all-time high in this cycle and last year in February, and of course back to the Y2K fractal. So this is perfect. So we want to see NVIDIA hold up around this 602 level and start to top. And you'll see it maybe go up some, pull down some, maybe start looking for a 5-wave pattern or a 3-wave pattern here in NVIDIA. If we look at this on Meta, so Meta has been ripping as well. So Meta, and we pull this fib. Let's go to the near-term pullback here on the daily. You can see we got right to the 1618 at 388. Overspill here at the diagonal is 393. So Meta also pulling back after hitting the 1618. Again, I'm looking for a top in this range. Okay, you may do something like this, come up, but I'm looking for some type of top here in this range to start forming in confluence with my market view. Let's look at this on the indicators as well. And we're not overbought yet on Meta, but again, you're just flat here in the bullish territory. We'll see if this can push up more. You're definitely selling off some after hitting the 1618. So Meta's a question mark, got to watch it. Microsoft obviously hit key resistance as well. And if we look at Microsoft from this fractal pattern, I'll look at this a couple different ways. First way, I'm going to look at this near term, right? On the daily, 1618, 399, hit it, selling off some. Still holding up though. But if we look at this from a larger perspective, Microsoft here, expansion 1618402. So I would not be surprised to see Microsoft rebound maybe Tuesday, maybe Wednesday for the top. And then we're going to be looking for some type of topping structure to form on these three big boys. The three big boys top, guys, again, 81% of the gains. Well, then the market's topping and we'll see what happens. But my market view is February sell-off, and we'll see where the S&P lands. If it can push up a little bit more, 48.85, 49.22 would be absolutely gorgeous if it does that. Let's go ahead and look at, we'll look at the MFI real quick. MFI is just bouncing up here on Microsoft on the daily. So we'll see if this can hold up and start tagging in these low 400 range. Let's go to AMD. AMD, again, has over 1,000 PE. This is part of the AI bubble, okay? The AI bubble. So you look at AMD, can do the near-term fib pull here as well. And you can see we pumped right back up. We got up the 1618, pumped up almost to the 2618 at 179. If we look at some other areas here to lay out our fibs, we can look at this from this perspective. And we have got right up to the diagonal again, one spot 902 at 167, just below it. So AMD, look at the candle, look at the shadows on this candle right now. AMD, if we start trending this way, coming into Tuesday, Wednesday, Thursday, then again, looking for a top here in this market as well, or in this asset as well, okay? AMD, I think, is going to give up a lot when the markets roll down, just like most of them will. But keep in mind, their earnings are on the 30th. Can continue to have that run up. We got a lot of events coming out. We'll talk more about them on Thursday, guys, but we got a lot of events coming out with data from the Fed, with the Fed meeting itself at the end of the month. So let's see what the markets do here in the next couple of days. I'll update you guys on the Thursday video. We'll see where everything is landing because, again, Thursday is that full moon pivot, with Wednesday being the potential Fibonacci pivot. And we're looking for topping action and then turns in the market. Guys, leave me a comment. I'll answer them as always. Thanks for watching the channel, and I'll talk to you guys Thursday. Take care, everybody.